me from the software side, no
Okay,
worries. So we are actually also going live on Facebook.
great.
Here we are, ladies. Welcome to another episode of the Unbossed podcast, everyone. I'm excited to have you all over. I'm going to be monitoring the LinkedIn chat. So if you want to give us questions, please go to the LinkedIn chat. I'm hoping that is going to update live, and I'll be able to see your questions. Today's topic, we're going to talk about central bank digital currency. And I'm looking over here because I have a screen with my notes. Um, but today's guests are Sangeeta and Diana, and I'm gonna let them introduce themselves. But first of all, I was telling them I am so proud to have women that can represent this topic. As you know, my podcast is about giving space for women who are in underrepresented areas to have a voice and a platform. And I'm super excited to have you both on the podcast. Welcome.
Thank you for having us, Marina. This is so exciting.
Give us, Sangeeta, why don't you start? Give us your credentials and what is your involvement with CDBC, Central Bank Digital Currencies?
Hi, so happy to be here. I am currently enrolled as a student at the University of Hong Kong, where specifically focusing on the cross-border aspects of central bank digital currencies and how and the macro CBDCs on emerging economics. So this is directly related to my research area. Aside from that, I'm also a fellow at the Digital Economist, where I work with Navrup on like different topics relating to blockchain, technology, gender role, or gender gap, if I may say. So yes, these are like my emerging research areas, I would say. By profession, I'm a lawyer. I'm originally from Bangladesh. And, I acted as a assistant legal advisor at the U.S. Department of Justice for like 3 years before I decided that okay, that's it. Quit my job and like focus more on research. So that's why I'm here. Yeah.
I love it. Thank you so much. How about you, Diana?
That's so exciting. Well, I'm very excited to be here. I work on central bank digital currencies from the standpoint. I write for Forbes, first of all, about central bank digital currencies and stablecoins. And to give a little bit of my background, I used to work in development finance in the investment banking branches of the Inter-American Development Bank and the World Bank. And that led me to see a lot of the inefficiencies of moving capital across borders. And I realized a lot of the frictions that we experience in the financial market infrastructure across the board. So that's actually what led me into this space. I've approached CBDCs from a standpoint of financial inclusion very much. Right now, I work for an investment bank also that focuses on blockchain, crypto, and also ESG. And when you think of ESG, it's a lot about the governance, and CBDCs have huge implications on the governance of monetary systems, payment systems in particular, and basically what does money mean, right? I also wrote a book on ESG and data because a blockchain is all about the record of data. And I run a blockchain discussion forum for Yale where we also discuss these topics.
Well, congratulations on all of your credentials. Amazing backgrounds, both of you. Let's start off with explaining what is CBDC, and how is it different from any other digital asset that we may have, like a digital checking account or a saving account, with a normal with a commercial bank. Any of you? Yeah.
Definitely, Diana, whenever you feel like jump in, just do that. So, central bank digital, to like, if I want to just simplify, it's like digital money, whatever we have right now as fiat money, let's say dollars. So it will be a digital representation of that dollar, but backed up by. And another important aspect of central bank digital currency is uh, accessible technology. The technology that are going to be used in issuing that digital currency will enable the public to access to central banks money, and it's going to be a direct liability bank. So those are like few characteristics that are associated with a CBDC. Uh, the difference, like one is sovereign backed, another is not sovereign backed. We have like cryptocurrencies, other like and then stable coins. All are private initiatives, or like big tech companies initiatives, and sometimes like it is all are decentralized in not all are decentralized in nature. Like cryptocurrency, stable coins, those could be decentralized. The fundamental difference is basically the central banks is not a part of those currencies. So that's one thing, and there are like several other things definitely. But yes, we can have the conversation going on, and all the differences
Yeah.
probably just like
Yeah, absolutely.
Yeah,
Absolutely.
Diana.
I will add to that
I
and will say that the Federal Reserve in the United States recently released their first concept paper on their vision for what a digital dollar or a US-based dollar-based CBDC would look like. And they define a CBDC much in accordance with what you, Sangeeta, mentioned. It is a digital liability of the central bank, which in this case would be the Fed, and it's widely accessible to the general public. So what would this mean, really? Right now, the only form of money that is it comes directly from the central bank that is directly accessible for the general public is cash. Otherwise, we have intermediaries, money that goes through accounts at commercial banks or through some of the fintechs. And both of those forms of money add an additional layer of risk, which is why commercial banks are subject to uh, insurance and additional liabilities to show that they have enough reserves in the case of a liquidity event. And in the more fintech and digital asset space, something like stablecoins is becoming increasingly scrutinized under the conversation of what would be potentially the prudential requirements, the federal deposit insurance requirements that should be required would these forms of money become scalable. And what's interesting about central bank digital currencies is that they would be a new form of providing a version that is as safe as cash through digital wallets to people everywhere. So that's an interesting innovation. And there's several, when you think about central banks issuing their sovereign currencies through CBDCs, there's a lot of design priorities that different countries have to think about, whether it would be a wholesale model or a retail model, for example, whether it would run on a blockchain or not on a blockchain, and what the design priorities would be, and then also obviously like financial inclusion, cybersecurity, privacy issues. There's a lot of questions that central banks around the world are still grappling with as they design their versions of central bank digital currencies.
I love that. Thank you so much for that. There's a lot of concepts here, a lot of concepts. We talked about fiat backed, right? One of the big questions about this is CBDC just a different implementation of a money product? Is it going to be fiat backed, this like in the same way that potentially some may argue differently, but the dollar could be insinuated to also be backed as well? And the other concept also that I heard that was interesting was like decentralized versus centralized. And so I was wonder if you could explain a little bit more about the maybe a little bit of the techniques that you've seen countries adopting or the arguments of the sides as well.
There's a lot to unfold here, to be honest, and one thing I can say that so much research is going on in this space, and a lot of times, I mean, Diana mentioned that it will depend on the CBDC's design. So there
Yeah.
can be retail, there can be wholesale, there can be token based, there can be account based, and then technology, the underpinning technology. So and what would be the role of the financial intermediaries as well? So we already have the existence of this whole interconnected financial system. We already have an established architecture. So what would be the role these institutions can play in an economy that is CBDC led? So those are the things that all the central banks are kind of sort of like exploring at this stage. However, we have I mean, I personally, I think that there are like four CBDCs because I know like a lot of discuss. I mean, there are discussions whether Chinese yuan should be considered as a CBDC or not, or Bacon should be considered as a CBDC or not. So I'm not going into that discussion. I'd rather just say like there are like four digital currencies, like sovereign-backed digital currencies, and one as I mentioned, Cambodia, China, and Bahamas, and also Nigeria. So these are like four CBDCs, and all are new. I mean, either like launched or in pilot stage. And the similarities in terms of like whether it's centralized or decentralized. A, at this point, like of course, central banks has some sort of like centralized ledger to so that they can monitor the transactions. The the infrastructure can be, for example, the Bacon, the way they are doing it, they use like Suramitsu, a fintech company, and their technology, Hyperledger Aroha, or I'm sorry, like Aroha probably. So they use that technology where the bank actually like know what's going on in terms of transactions. They deployed a private fintech company to launch the
Yeah.
whole to run the whole infrastructure. And instead of like unlike other blockchain technology, they are using like some voting powers of the payment gateways to finalize the transaction.
Got it.
And everything is like, to be honest, like since the technology is so innovative and it has so many potentials, all would depend on the motives of central banks, like what they want to achieve, what is their policy goal. For example, Cambodia focused on financial inclusion aspect a lot, and
Yeah.
the reason is
It,
like they have a population which is so young and they're like very tech savvy. At the same
yeah.
time, in China, they have like a whole digital infrastructure is in place. So it was easier. It's an easy transition for them from like going to fully digital. But it
This
would not be, sorry.
yeah, this brings me to a really good question, Diana. If you could answer is why would governments, sovereign countries interested in implementing what is the thing that is pushing governments to implement a CBDC? What are the problems that we're facing right now that it's pushing this type of innovation?
Well, first and foremost, I'm going to say that we live and function in a financial system that has been designed in many ways during and for the Industrial Revolution, right? So there's so many levels and so many ways that are in need of innovation for financial services across the board, right?
Yeah.
And when central banks are exploring this technology, there's a lot of benefits, especially when we think of blockchain-based systems to move money. It's basically providing the opportunity for almost immediate, real time, and extremely cost-efficient clearing and settlement, which right now is very inefficient, very intermediated. There's all these layers of intermediation that add additional fees and risk because there's a lot of uncertainty. In normal trading environments today, we've seen it's a normal standard to have T+2 for clearing and settlement to even happen. And the
What is T+2,
DTCC
Diana?
T+2
Sorry.
is when a trade happens,
Yeah.
the actual settlement, which is when the buyer buys and the seller sells, that the money is delivered and the product is delivered to the opposite party. It takes 2 entire days to figure that out and to set that in stone. So that adds a whole layer of risk. The DTCC, for example, has been thinking about these infrastructures for a long time, and they just recently came out with a paper where they're exploring how to go down the path of T+1. So that's just one example of how the entire financial system is in many ways in need of innovation. And when central banks are contemplating CBDCs, like I mentioned, there's many options of design priorities, one of which has been very popular and very common is the concept of financial inclusion, because there are so many populations that have been unbanked and underbanked by the normal financial system. If you take the example of open banking and what that has produced and the opportunities that has highlighted out of the UK, it's clearly a huge opportunity to provide financial services for populations that are broader, right? And the concept, I think, is interesting of CBDCs being designed as retail as opposed to wholesale. And I'm going to go into what that means. A wholesale design for CBDC would be very similar to the traditional system, where only commercial banks have an account at the central bank where they can draw money from. I and you and retail individuals don't have the opportunity to draw money from the central bank. We have to keep money in a commercial bank, which in turn keeps money at the central bank. A wholesale CBDC would provide that functionality, as opposed to a retail CBDC, which would provide the functionality for individuals to access money directly from the central bank. There's implications for both, but some countries that have been focusing on the retail side of CBDCs, that could be a big opportunity for in many ways, programmability of a lot of social movements of money, like, for example, COVID stimulus money going directly to the individual. And also another benefit to central banks that are contemplating this would be the programmability of money, the ability to embed taxes and fees within transactions automatically, and ways to conduct monetary policy in more streamlined ways through automated, again, transactions and systems.
Yeah, I love that notion. There's a lot of implications here for the end user. And maybe since we started from the central bank standpoint, we take a 180 and start from a user perspective as well and say, you started this conversation, Diana, when you said we want to create more inclusion within access of this type of financial ability to just people withdraw money directly from the feds. What are implications from or benefits that you see from the user side that this type of system can bring?
Well, if you think again, that would point to a retail case of CBDCs where everybody could be able to download a digital wallet, like an app, on their phone and hold money through that, to be able to make digital payments. It's all the implications that go toward the trend of going cashless, and there's benefits to that, inclusion being one of them, but there's also risks. where privacy implications or cybersecurity risks are very much at hand and they're very top of mind in these conversations, which central banks really, really have to get right, precisely because of implications on consumer investor protections and what that implies.
Sangeeta, what do you think?
Um, I think one of the aspects that I'm currently working on the cross-border impact of CBDC, and one of the potentials of CBDC is to Diana already mentioned about like the latency and the inefficiencies of the cross-border transactions we have in the existing architecture. So CBDC, because of the underlying technology. I mean, we use blockchain or something like that is not blockchain, but like it has this potential of like being interoperable. So that ability feature can make transaction like faster, and then it can happen in like within seconds. For example, the BIS Innovation Hub, they're running some pilots and to examine the this like this cross-border impacts of this CBDC. It's called like MCBDC or like MCBDC bridge. So where they are trying to see like how the CBDCs from like different countries can actually create like an interconnected platform, and then just like the transaction happens smoothly. So that would be a great benefits for even from like an user perspective, because like people who are sending money from abroad, one country to another, let's say remittance, they can do it like within a day maybe. And yes, I mean that part is like very important and definitely worth exploring.
Yeah.
Yeah.
I would
I'm gonna
also
ask
add to
a
that.
couple of. Oh, go ahead, Diana. Finish up,
No, sure.
please.
And say that we need a lot of incentive alignment across all the stakeholders that would be involved in CBDCs. You mentioned, Sangeeta, a great point, which is interoperability when we talk about cross-border payments or something like the dollar, again, or any currency that is widely used around the world. You need interoperability across different systems, across countries, but also interoperability with legacy systems within specific countries in order for this to scale and be actually implemented. And taking a little bit of a product management mindset from the standpoint of the user, we've seen already with the payments world and examples from the credit card industry, it was actually really hard to get people to transition from swiping their credit cards to tapping cards. And those behavioral questions and how are people going to adapt to have a digital wallet? How are they going to pay for something if it requires a slight change in how they're going to tap or touch or whatever, to what are they going to do to make the payment? Those behavioral aspects are actually really important too. So again, you can't just like create a coin and expect everyone to use it. You have to really think through the user how the user is going to perceive it and live it and experience it.
I love that. Thank you so much. Um, I wanted to ask some like maybe extreme questions, just to set the stage of like probably not it's not going to be as extreme. But some of the fears we've heard many times is our central banks going our commercial banks going to be completely um uh, erased, right? Another question is cash no longer going to be a thing? And how are we going to deal with the elder population that is not used to even doing digital transactions? How are we going to give access to people who do not know how to use technology and smartphones? And are we just all going to converge into one currency? And is the government going to have access to all of our finances? So I know the answer is like no to all of these, but I would love to hear your opinion about maybe, what are some other myths, or what are some trends that you've seen that can refute some of these more extremist questions?
Those are like some really good, not good, but like of course, I mean most like important concerns for even for regulators and central banks. And one of the as you mentioned, like what's going to be the future of our financial system or like the commercial banks. Uh, and that is why the design aspect is so important. What would be the mode of CBDC, and if a country, whether they want to adopt a CBDC or not, because you really need to have a motive, like a strong motive to issue CBDC. I mean, the examples we have right now, like for example, the Bahamas or Cambodia, they have like strong motives of financial inclusion, especially Cambodia. They specifically mention that we want to. I mean, rather, I think they also mentioned, aside from financial inclusion, they also mentioned about the strength of their own currency. So those are like motives that would help uh, if a CBDC wants to succeed. Definitely, those are going to be the motives. But at the same time, I my personal opinion is about the whole financial intermediaries thing is like is not going to be abolished, because that's going to be a drastic measure, and probably it's not very fruitful if we want to have a sustainable CBDC. Rather to integrate financial intermediaries in the design so that it can be more effective. We have to use the legacy system or the system that we already have in place to expedite the benefits of CBDCs. One thing. And second thing about the privacy, interesting because I have a different opinions about privacy. A lot of people will say that like, okay, I want to be anonymous because I can use cash and nobody should know where I'm spending at. The the concern here is like, especially from a like a legal and regulatory perspective, like you cannot track money laundering or terrorist financing when it happens in cash. So when regulators say that like I want to track those things, they have a genuine concern. Another thing is that for a country which is who the countries that already have like deep, sorry, the countries which are cashless already, for example, Sweden. I mean, to what extent privacy should be compromised, that is debatable. I'm not giving up my privacy. So in this regard, Bank of Canada, they have a paper on like how privacy can be incorporated in CBDC. And those are the questions for like the central banks, definitely. Like what kind of technologies they want to incorporate in CBDC's design. I had several work on federated machine learning and privacy preserving technology. So it's worth exploring whether those high tech aspects can be incorporated in CBDC or not. So my only like my concern is like not to take any decision, like not to take any rush decision, rather just have a understand the motives and the policy goals of CBDCs and what designs and technologies actually can bring the best of CBDC.
Nice, thank you. Yeah, now what do you think?
That's right. I agree. And I think we're pointing toward a world where we'll see more complementarity and complementary forms of different currencies, whether they be privately issued or publicly issued. And that will lead to financial services that are more tailored to specific communities and specific use cases, which is something that we're already seeing with the explosion of DeFi. With regard to your question on what's going to happen to the banking system and actual banks, again, no, I don't think banks are going to go away, and it would be really bad if they did because it would have huge implications on liquidity risks and just
Like
they're
all
there
over
for a reason,
our
right?
country. Yeah. Yeah.
Yeah, like the risk of bank runs and it would have a huge disruption also on the way people access financial services today.
Totally.
I think the role of CBDCs and blockchain technology in general, with decentralizing certain aspects of financial market infrastructure, could have many benefits for things like systemic risk, the role of the narrow banking sector, And when we talk about going back to lessons learned from the financial crisis and opportunities with decentralization to have infrastructures where there's no longer a single point of failure, where a single entity could take on way too much risk, such that when it can't handle the excessive risk, it'll spread it across the entire system. I think there's solutions to that with decentralization and infrastructures on which CBDCs could run. And finally, when we talk about privacy, um, I don't think it's black or white. I think there are ways and there's compromises that are being explored, whether it be the role of using third parties to manage sensitive data and AML, KYC, whether it be the use of technical terms like hashing and the pseudonymity that could be embedded within blockchains to record transactions, so that protections of sensitive data could be embedded within the entire system are possible. And within the EU blockchain observatory, and particularly the privacy authority of France, has come up with very specific and potentially beneficial ways that the blockchain on its own could be made to be compliant with GDPR and the right to be forgotten and those requirements. So there are ways. I think regulators and institutions and public and private institutions are going to have to collaborate, align incentives. Public-private partnerships are going to have to be very, very important in order for coming up with a system that fits within accepted and regulated spaces, but also draws from the competitiveness of private sector solutions on a technical level. And that requires broader coordination and collaboration, which we're seeing, and it's a very exciting time.
I love that. Thank you so much. I have one more question from the side of the central bank, and then I will have to move more on the user-centric portion of this. But my question is, and I'm still confused about this because I was reading a lot of articles around this. There's even today there is a lack of understanding around valuation of dollar, right? And how we determine the value of a dollar compared to the value of euro or other currency in the world. And my question is, when you think about valuation of the CBDC currency, whichever is going to be implemented, what do you think about the value, and how do you think that value is going to be established? Is it similar to how we think today of the US dollar, or is it going to be something different?
This is a very complicated question, to be honest. That's fine. I mean, I totally understand. This is very legitimate question. So as of now, the discussion is basically that CBDC should be valued in terms of the national unit of account. So it's one is to one, I basically. So
So $1 to one whatever CBDC currency.
Yes, one digital dollar would be like one physical dollar. So that's the current discussion. What's going to happen in future and how this like whole valuation would work? To be honest, I mean, Diana, do you have any answer? I'm feeling like okay, because we had the histories of like whole valuation system from gold to gold reserve to like exchange rate, floating rate, fixed exchange rate. So is there going to be a next valuation standard? Who knows? But at this point, like nobody is discussing about it. So Diana, if you have any insights on
Yeah, I agree with you. There's a lot of factors that come into play. There's a lot of potential open questions. Theoretically, it should be one to one a fiat currency and the digital form of the currency. That's the way it's supposed to be designed, but it has to be done well, right? Drawing again to the example of stable coins, which to some extent have tried to fit some of the use cases that CBDCs could potentially go into once they're launched. stablecoins had a lot of stablecoin issuers had problems with actually showing that they had enough reserves that would be equivalent to the money that was in circulation. So that reflected negatively on the peg. So the peg broke and it goes up and down and it fluctuates. So that's not an ideal. Ideally, with central banks, which are the people who issue money, that should not happen.
Mm-hmm.
But who knows if there's other factors? Maybe there is additional value in programmability of taxation and embedding fees, which could be another conversation down the line, or maybe other tokens. But ideally, for now, I don't think so. It should stay one to one.
I'm still here. I'm showing that there we go. My camera turned off for a second. Yeah, thank you, Diana, so much for that. There is, it's always in my mind the question of two seemingly coexisting one digit, one money product, like US dollar and whatever CBDC currency would, that we will create. If they're coexisting, but they're taking different use cases and being deployed and implemented for different things, the question is open, like how is the valuation of those two going to be different and or similar and potentially completely be separate? So thank you so much for giving your opinion about this. All right, let's do a fun exercise quickly. Like if you put like your user perspective on, right? Like, and you are now from a user perspective looking at the systems, right? And you have you have already available some type of cryptocurrency. I'm not going to name any crypto because it doesn't matter. Like you're using your digital wallet, you have CBDC potentially available. What are some of the, like, from the user perspective things that you may want to see happen? And I know this is a big question, but I was just wondering out of curiosity, for example, do I use both a private crypto and the CBDC crypto, or do I pick one, or do I still keep using digital money? Like in the future, as you see yourself progressive into these type of systems, like what are your thoughts around from the user perspective, usability of these tools? And purely from like you make a salary, right? Like you have your salary, and then is some of it gonna come from some type of like even like bank specific cryptocurrency? Is it like, how do you envision this system to work? Because there's so many possibilities, but what would you want from a user perspective to happen?
Interesting.
I would think it depends on the infrastructure. Or go ahead, Sangeeta.
Yeah.
No, Diana, go ahead. I always speak first, so just go ahead.
I would say it depends on the level of acceptance and the infrastructure right now, because we're seeing today a lot of the crypto world is disconnected in its functionality from the traditional banking system. And there's reasons why, but it's not like I can use my Bitcoin to pay for my coffee, like a lot of people say. Although in the DeFi world, Terra in South Korea has done some interesting things to enable that functionality through cards. So it depends on the level of interoperability and the level of acceptance. And as a user, the more seamless the solution, and the more I don't notice the difference with the ways I pay today and what I'm used to today, the more it'd be just easier to adopt, right? The more I don't even know what's in the background, right? As opposed to having to learn a new set of habits, potentially.
Totally. Makes sense. Sangeeta, what do you think?
So I definitely agree with Diana. Just to give an example, like real life example. For example, on Etsy, and you want to buy something on Etsy, and when you try to pay, you see like several options. One is like Visa, Mastercard, like credit card option. One is like Apple Pay, Google Pay, and then you have the PayPal options. So you choose like, okay, just like my Apple Pay is like connected with the iPhone. I'm on my Apple device, and so I'm just gonna use Apple Pay. Or my computer is like connected with my PayPal, so I'm just gonna use PayPal. But I'm saying it from my own perspective. So this is how I usually do my payments. So it definitely is gonna depend like how easier it is for me to use and the acceptance. About cryptocurrencies, one thing is like for sure that I mean, regulators are fragmented, and at the same time, users are fragmented as well. There are people who are risk averse. They don't use cryptocurrency. They don't invest in cryptocurrency, and there are people who believe in cryptocurrencies. So they have cryptocurrencies. So it's gonna depend on the like behavioral aspects, how easy it is for me to use, and so many other factors like technological infrastructure and everything. So yes, I mean we will see. Like this is an exciting time to be honest.
I love that. It sounds like we're even creating even more ways to diversify our financial investments or our assets and categories of assets that we may have. Diana, you mentioned DeFi a couple of times already. Can you give us a an intro of what DeFi is? And then Sangeeta, I'm going to let you explain some of the uses of DeFi that are happening today. And yeah, no, feel free to also mention the examples. I just want to both to answer that question.
Absolutely. I think DeFi has been a really interesting trend that has exploded in the past couple of years, as I would kind of define it as a kind of overall movement toward decentralizing financial systems, whether it be legacy financial institutions, financial instruments, financial use cases. It's built not on banks, but on a tech stack. And as such, it runs on open systems that are heavily reliant on a community of engaged participants who literally have broken down the concept of a banking system into the basic Lego blocks to build specific financial services that are customized and tailored for different interests for the community. And it's built, again, as a tech stack. We have the basic smart contract layer, which in many cases has been Ethereum, but there's been others that have popped up. And that's basically the functionality that allows for automated transactions that occur as soon as certain conditions are met. That's what a smart contract is. So on top of that layer, then you have the DeFi primitives, which are the tools that are used to build these Lego blocks for the DeFi applications. And the tools include probably protocols for the use of smart contracts and stablecoins and some sort of data, uses of data and tooling underlying. So once you have that set of basic functionalities, then you're going to be able to actually build specific applications. And on top of that, then you have the layer where you have decentralized exchanges, which could be Uniswap, Balancer, Curve. On top of that, you have functionalities that have to do with derivatives or with lending. We've seen huge alternatives in the world of DeFi lending as opposed to mainstream lending in the traditional finance space because the interest rates are and the payouts are a lot higher. Asset management, aggregators, automated market makers. So a lot of interesting tools that are still getting figured out and developed as we speak. But overall, I would call it a really democratized form of creating access to finance through a truly global liquidity pool, and creating a very level playing field for anyone who has a wallet to be able to interact with this.
I love it. I think I understand the implication is creating micro financial systems, potentially even community level, Sangeeta, have you seen any examples of this and how it has been implemented?
So when I mean this concept of DeFi is it's so new and so novel, like all the implications are like emerging. Understand that what it means. So I don't try to define decentralized finance to be honest because it gets like too complicated. I prioritize like three aspects. One is like decentralization. Uh, Second is like smart contract. Diana mentioned like it's operated on smart contracts, and third is like the use of stable coins or some form of cryptocurrency. So the whole financial system, which I call a parallel economy, to be honest, because it acts like the traditional financial system, but it's the manner the way they operate, it's decentralized in nature because of the technologies that are involved. So you can have like savings account, you can have like you can do lend, you can lend from organizations, you can have like derivatives, securities, and all those of like aspects that we already see in the traditional system. But somehow we are not happy with it because they are like risk associated with it. We are not happy with big techs or like big banks and etc. So either like try to venture into like try to like try out something new, uh, but at the same time this also like indicates a great potential in terms of like access to finance, which Diana already mentioned, and also financial inclusion perspective. For example, just to give a small example, like an SMEs which doesn't have like big collateral, a physical asset. So they collateralize their like stable digital assets and can get like um, can borrow from those like decentralized companies. So those are the aspects which is very new but at the same time promising. However, there are like another discourse that I came across within the decentralized finance. There is like this is called centralized finance. So the thing is, decentralized finance is supposed to be truly decentralized, where community is going to be they are the ones who operate the whole thing. It's permissionless, public blockchain, open source protocol, but then of course like this also shows like some other risk factor which centralized, I would say like permission blockchain protocol, they try to just like okay minimize this risk and try to like bring some sort of like centralization. So they companies like which operates on permission blockchain. So it's evolving, and to keep up with those things to be honest sometimes it's difficult, but yes, happening, trying to be updated on those, but these are the like crucial aspects of decentralized finance.
Thank you, Sangeeta. Um, Believe it or not, we are at time. And I would like to ask one last question about the topic to each of you. Um, what is the most interesting tool or the thing that you're following the most personally? For, professionally, you do this for a living, but what are some of the trends or tools or concepts or pieces of literature or even things that you're currently doing in your personal life to that supports this topic, and where is your passion driving you towards at this point? And Diana, you can start, please.
Well, I follow a lot of and Sangeeta mentioned them before, the Bank for International Settlements and their research I find to be very cutting edge and on point, and it makes sense. I think they've done a great job of aligning stakeholders and bringing people to work together on a lot of these implementations, and because it takes a lot of different partnerships. So I would definitely recommend their work on the
Absolutely.
CBDC side.
What about you, Sangeeta? What do you think?
Yes, absolutely. I mean, IMF is also like doing a lot of good work as well, and the way they collaborate with different stakeholders and try to bring up. Sorry, like there are some noises upstairs
No
probably.
worries.
Yeah, so their research definitely. I always like look at their research. Aside from that, blockchain governance is something like I'm really interested in, and we are the digital economics like, as a part of like my work with the digital economics. We are working on like some community of blockchain where we're trying to utilize. The Ostrom's idea of like nested enterprise. Interesting because uh, my research is like how to include that like those aspects in the blockchain governance protocol because we say like it's decentralized a lot of I mean as I mentioned like in order to keep some sort of like control the governance is not truly decentralized so
Mhm.
those are the areas aside from my PhD, I also like take huge interest in blockchain governance and how it can be truly decentralized, so that the promise that the blockchain showed initially with the launch of the Bitcoin can be utilized or like fulfilled in future.
Awesome. Thank you both for coming on the podcast. Diana, Sangeeta, where can people find you?
Email address or what? I'm based in New York City, so if anybody comes to New York City, definitely. And my email address is like Sangeeta at connect.hku.hk. So, and yes, if
Yeah,
anybody
I'm
wants
also based
to
in New
know.
York. LinkedIn. I'm on LinkedIn,
Especially.
Twitter. Yeah, yeah, absolutely. I would love to. Yeah. Um, Twitter, Diana Zalis, and usually I post my Forbes articles and just the stuff I find interesting. Mhm.
Nice. Thank you both for coming on the podcast. It's been my pleasure, and thank you for covering this awesome topic.